Hey, in this video, I'm going to answer the question, can you get an SBA loan to acquire a SaaS business, a software as a service business? The way that SaaS businesses are often funded is through investor capital. And oftentimes when they're starting up, they're losing money, they're putting in investor cash and running at a loss, maybe on purpose to try to grow, right? And that is kind of opposite of the way that SBA typically works. SBA is around cash flow. They want positive cash flow to be able to repay the loan. So these are kind of two different worlds a lot of times, but every once in a while there are good scenarios where you could buy a software as a service business with an SBA loan. I want to walk you through what that scenario would look like. What would the deal need to look like in order for that to be possible? But before I do that, just a little bit of my background. My name's Adam Huxama, formerly an SBA lender of over 12 years, who closed over 1,500 SBA loans during my time as a lender. And now I own ProjectionHub, where we help folks create financial projections, business plans, and ultimately walk through the process of securing an SBA loan for either a startup or for an acquisition. We also do a lot of work helping SaaS companies with financial models for raising capital from investors. And so a lot of times, though, those two worlds just are not crossing paths. But every once in a while, we find a SaaS business that, somebody is getting an SBA loan for. And so I wanted to talk through what's a good example of that and how that would work. All right, so I have our acquisition projection template pulled up here, and I'll put a link in the description of the video below so you can grab this template if it's helpful to you. The whole thing with SBA and an acquisition deal, it all really comes down to this green line here, this debt service coverage ratio. This is probably not something that you've heard of. If you're in the SaaS world, you are thinking about annual recurring revenue and monthly recurring revenue and lifetime customer value and cost to acquire a customer, all of these acronyms that kind of don't mean anything to an SBA lender, but debt service coverage ratio is the important one. So what that means is the lender is looking for you to have a debt service coverage ratio of 1.25 or above. That means you have $1.25 of cash flow or earnings for every dollar of debt service. So by its very nature, that means that you need to be profitable. The SaaS business needs to be profitable and cash flowing already in order to have any chance at getting approval for an SBA loan. So if the business has been raising capital from investors to fund losses to grow faster, it's just not going to be a good fit. And really, the deal needs to cash flow historically, not just based on projections, although we're ProjectionHub and we like helping folks create projections going forward. A lender is going to want to see that, hey, based on this proposed acquisition loan, we want to see that this business would have cash flowed this loan last year, right? And so the way you need to think about that is get your historical financials into a model like this, the historical financials of the business, and then you need to see what the profit is, what the cash flow is, and then what would your proposed loan payment be? So in this example, we're saying it's a small acquisition. So we're saying we're going to get a $382,500 loan. Okay. We're going to use that money for the acquisition of the business. We're also going to put as the buyer, we're going to put in $45,000 worth of cash to kind of meet our roughly 10% of the deal down payment or equity requirement. All right. So based on that purchase price, $382,500, we can see our debt service coverage ratio is 1.69. So we're in good shape. And we can see what the profitability looks like based on our projections going forward. Now, let's say the seller said, no, we want to sell this for $500,000. So if the deal was a $500,000 deal, loan terms are the same. Let's say interest rate's 9%, 10-year term. What does that look like? Okay, now we're right on the edge here. Debt service coverage ratio of 1.29. So we're just barely above that 1.25. If they want $600,000 for the business, that's not going to work. So now we're at 1.08 debt service coverage ratio. That's below the minimum for what an SBA lender would require. And so you can see how what you're going to need to do is, if you're looking to acquire SaaS business with an SBA loan, the first filter is the business has to be profitable in at least the last tax return year. Okay. It's got to be profitable last year. And you're looking to see if it could cash flow that loan last year, not just based on future projections. Okay. That's kind of the bare minimum. And then you can kind of play around with that loan amount to see how much could the business potentially afford in terms of debt. And that ultimately kind of sets your purchase price. So I hope that makes some sense. Hope that's helpful. That's the way a lender is going to look at it. So there are certainly SaaS businesses that are profitable, that are wildly profitable. And so those could be a good fit for an SBA loan. The challenge you're probably going to run into is that the valuation and earnings multiple that a SaaS business might typically command and what would cash flow from an SBA loan perspective are probably probably going to be kind of two different worlds apart. A lot of times SaaS businesses are valued on, maybe the annual recurring revenue or earnings multiple that is a lot higher than what SBA would allow for. So that is going to be your challenge too. That may mean what you need to do is just put in more equity. That's probably the answer, is that you could still finance a portion of the deal with an SBA loan. So maybe you're only financing 50% of the deal with an SBA loan or 30% of a deal with an SBA loan, and you're coming in with the rest of the purchase price as equity. That could potentially work, could potentially get you up to a valuation that the seller's comfortable with and that also meets what the SBA is going to require from a cash flow perspective. So hope that's helpful. If you have a deal that you would like to run by me, feel free to reach out at support@ProjectionHub.com. I can take a look at your deal. I'll also put a link in the description of the video below to both our acquisition template here as well as our free SBA review form. So you can fill out a little bit of context and information about the business that you're looking at and about you personally as the buyer. And that'll give me some context to be able to provide you some feedback and give you a free review on your chances for an SBA loan based on your specific deal terms. So hope that's been helpful. Let me know if you have any questions. Thanks.